Hello, I'm Cristina Marujos, and you're watching the Daily Market Comment at xm.com by Rafi Boyajian. Markets started the week on a positive note on hopes that the talks between U.S. President Trump and Chinese President Xi on the sidelines of the G20 summit on June 28th and 29th will lead to a resumption of trade negotiations between the two countries that have been on hold since early May. However, a major breakthrough is unlikely, as on Friday, the U.S. Commerce Department added several Chinese companies to the entity list. In response, China added FedEx to its own unreliable entities list, raising the prospect of further tit-for-tat measures. President Trump may have called off a military strike on Iran last week, but tensions in the region remain heightened as Washington plans to announce new sanctions on the country on Monday in response to the recent attack of oil tankers. Although an imminent conflict may have been averted for now, future military action remains a strong possibility, as Trump has threatened obliteration like you've never seen before if Iran does not return to the negotiating table. The recent escalation has bolstered oil prices, with both WTI and Brent crude surging to more than 3-week highs. Similarly, gold has also received a double boost from the rising geopolitical tensions and falling sovereign bond yields, especially in the U.S., that lifted the precious metal to 6-year highs on Friday. The increased geopolitical risks and a more dovish Fed have not been good news for the U.S. dollar, as the greenback slips to 3-month lows against a basket of currencies. Investors continue to heavily price a rate cut by the Federal Reserve at its next meeting in July, and PCE inflation data due later in the week should provide a further clue about the Fed's intentions in the coming weeks. The euro got a boost on Friday from better-than-expected Eurozone PMIs for June, even as the European Central Bank signals that additional stimulus may be needed as price pressures remain muted. This puts the focus on the flash June inflation readings due later in the week. The New Zealand dollar was on the front foot too, despite strong expectations that the RBNZ will cut rates further over the coming months. The Reserve Bank of New Zealand holds its next policy meeting on Wednesday and is anticipated to hold rates unchanged, but could signal more cuts. This was today's Daily Market Comment at xm.com. Have a great week.